What is a trend? The trend is simply the direction of the market, so which way the currency pair is moving. But when you have a look at the charts, the first thing you notice is that there is no straight line to help you identify any direction. You never see something like this. But you can see something like this. Even if it is quite obvious that the price is going up, how can you say that? Let's analyze this example. You need to have a look at the highs and lows that are formed on the market. In this example, we start from here and the price goes up before having a change of direction. So just focusing on these 3 points, we can say that the first one is the first low, then the price reaches a high and then it goes back to form a second low. Then it starts to go up again and we have a new high, and then the price forms the third low at the end. Now, are these highs and lows growing? Yes, the second low has a higher price than the first one, and the third low has a higher price than the second one. The same thing for the highs. Therefore, it's fair to say that while the price is not going up as a straight line, overall the price is going up because new highs and new lows are higher than the previous ones. This concept defines an uptrend. So during an uptrend, we tend to have higher lows and higher highs, with a focus on the higher lows. That is the main condition for an uptrend. When new highs and new lows are lower than the previous ones, we have a downtrend. In a downtrend, the main condition is that we have lower highs. We also have a third type of trend, which occurs when the price is not going up, but is not even going down. This trend is called sideways trend. In this situation, the price moves in a range that is defined by a support and a resistance, just like we have seen in the previous lecture with the example on euro-dollar. Okay, let's immediately have a look at some examples so we can also learn how to draw trend lines and how to trade them. Here we have US dollar against Japanese yen on a 4-hour time frame, and remember, the first thing we want to do is to understand the market structure. In my opinion, it is pretty easy to see that the price is going up overall, forming at least higher lows, although it's not so clear regarding higher highs. If it's not so easy for you to see that overall the price is going up, don't worry, these things are only a matter of practice. With more experience, you will immediately spot market structures and trends like this. So as I said, it looks like the market is forming higher lows, so the first thing I want to do is to draw a key level, in this case a trend line, that can give me a good representation of these higher lows. So the first low is here, and I want to draw a trend line that can include more or less all the relevant higher lows we have in this market structure, so something like this. You can see that when drawing a trend line, it's not that you have 3 or 4 points in which you have to draw a line that precisely go through these points. Remember that key levels are not exact prices, but areas of prices. As long as your trend line gives a good representation of the market structure, it doesn't matter if a few times the price went slightly higher or lower than the trend line. Okay, we have identified this key level connecting higher lows. Can we also spot a key level that connects higher highs? I don't think we have clear higher highs on this chart. If we study all the highs, we may start from this one here. The next one is higher than the previous one, same situation with the next high on the market, but then what about the next one? It looks like it's lower than the previous high. Then the market resumes its structure with higher highs for a while. So at the bottom we have a clear trend line representing the action that is happening on the market, while at the top we don't seem to have one. We can try to draw a trend line starting from this point here that we can consider as the first high in this chart, and connect it to the high that we have right here, but it doesn't really seem to add anything to our analysis. It certainly doesn't seem to connect a series of higher highs. We can try to lower this trend line, but still it doesn't seem to work very well, so I'm just going to cancel it and we can work with just one key level, the one that we have identified at the bottom. So how do we trade trend lines? The same way as we trade support and resistance. The standard support and resistance are horizontal lines. Trend lines can be considered as support and resistance that are drawn as diagonal lines. So this trend line we have at the bottom can be traded just like a support. Let's have a look at it. The price is going down from here, starting to approach our trend line at the bottom. Let's say that at this point, in real market conditions, we will still not be so sure that this uptrend line is representing the action of the market. So we don't take the trade here and we wait for the next opportunity. The price starts to go up again and then it comes back to our trend line. How do we trade in a situation like this? We want to use the same principles we have learned when we traded support and resistance. We want to wait for a change of direction, the so-called rejection, before opening the trade. For instance, here we seem to have a good rejection with 3 green candlesticks in a row, pushing the price up and rejecting the trend line. So it seems to be a good opportunity to open a long position. So let's place our entry here after the 3rd green candlestick. And the entry was pretty easy, same process as support and resistance. But what about the exit? So what about stop loss and take profits? We apply the same golden rule. Stop loss outside the market structure and take profit inside the market structure. So stop loss outside the market structure means that we want it below the uptrend line. Something like this is quite reasonable, so below the trend line. Regarding the take profits, in this case, we only have one level defining our market structure. We don't have any upper limit that we can use to help us setting a take profit. In the second part of the chapter on technical analysis, we are going to study some tools such as indicators that can help you setting accurate entry, stop loss, and take profit levels. But even without studying indicators, remember that applying the knowledge you learned in this course, plus a bit of logic, you can already figure out very good levels of entry, stop loss, and take profit. In this situation, we are trading with a long position because we have identified an uptrend. By definition, in an uptrend, we expect to see higher lows and higher highs. So we expect the market to make a new high that is higher than the previous one. If we consider this one as the previous high, we can set the take profit for our trade just slightly above it in order to catch a higher high in this uptrend. So something like this, and you can see that we would have won the trade in less than a couple of days. We could have also considered this one as the previous high. It depends on your interpretation of the market. I wouldn't say that it is a mistake to consider this one as the previous high. It depends on your interpretation of the market. I wouldn't say that it is a mistake to consider this one as the previous high. In this case, we want to place a take profit above that point, expecting a new higher high since we have established that the price is in an uptrend. So something like this, just slightly above the previous high. It would have taken us a few more days to win the trade, but still a win. So nothing complicated, we apply the same principles of market structure, rejection, and breakouts. There is one difference is worth mentioning between horizontal support and resistance and trend lines. This difference concerns the stop loss. When we have studied a trade on the horizontal support level, we placed our stop loss below the support and it made sense to have it there for the whole duration of the trade since we are talking about a horizontal level, so the distance between the key level and the stop loss is always the same. When we trade with trend lines, since they are diagonal lines, the distance between the key level and the stop loss increases with time. So at the beginning of the trade, it makes perfectly sense to have the stop loss here below the trend line. But what about after a few hours, when we have the trade around this price here? We would have our stop loss that is pretty far from the current level of the trend line, so we can also decide to adjust the stop loss as the trade proceeds and make it closer to the current level of the trend line. This way, we reduce our risk, and sometimes we can also move the stop loss to the entry level and have a risk-free trade, or sometimes even move the stop loss to a positive area in which we can guarantee a profit. I trust that by now you know how to adjust the stop loss for your trade on the MetaTrader 4. So a difference that is worth remembering is that with trend lines, we also have this additional option of adjusting the stop loss as the trade proceeds, which is something we don't usually have with horizontal levels. Let's move to a different example so we can further strengthen the concepts learned so far. In this example, we have euro against Canadian dollar, so we are also going to start checking some minor currency pairs. The time frame is 1 hour. Once again, for an intermediate or expert trader, it's easy to determine at first glance that the price is declining, indicating a downtrend. If you can't see it, don't worry, because with a little bit of practice and experience, you will get there. So we want to try to find at least one key level that represents this downtrend. The most important aspect of a downtrend is the price forming lower highs. So of course, the first thing we want to do is to check if we can have a downtrend line that connects most of the lower highs we have on the charts. We start from this high and we try to connect all the important highs. Again, it's not a matter of connecting all the highs as they were exact prices to be on our downtrend line. We just want a good representation of the highs decreasing. It's not important if some of them are above the line and some of them are below it, as our trend line represents an area of prices. We have drawn a downtrend line connecting lower highs. Can we draw another one connecting lower lows? It would be great because in that case, our market structure will have an upper limit and a lower limit, which allows us to easily set stop loss and take profit. So let's have a look. We can start from this low here, and we can try to connect all these lower lows here. It actually seems to work for a while until we have a breakout with the price going further down. If we try to draw something different, maybe connecting these two lows, or even trying to include the one that we have at the end of the chart, it kind of makes sense. It does connect some lower lows, but I don't particularly like it because there are so many other lower lows in between that are quite far from this downtrend line. So we cannot really say that this downtrend line is representative of what is happening on the market. I prefer not to have it, so we can work with just one key level, the downtrend line we have at the top. How to trade this market structure? Let's say that we don't trade the first bounces we have because it's at the beginning of the formation of the downtrend line and we are still not sure we are in a downtrend. After a few bounces though, we can confirm that we have a downtrend represented by a good downtrend line, so we can start considering our trades when the price approaches it. Here, for example, the price goes up and approaches our trend line before starting to go down again. As soon as it starts to go down, we want to take advantage of the so-called rejection to open our trade, so we open a short position here. Regarding the entry point, always the same procedure, nothing too complicated. What about stop loss and take profit? I know I have said it a million times, but this is so important that you will forgive me if I repeat it. Stop loss outside the market structure and take profit inside the market structure. Outside the market structure simply means above the downtrend line, so we can place a stop loss like this. The take profit can be a bit more complicated because we only have one key level and the market structure is not defined by any lower limits. We can apply the same logic we have applied in the first example. We have assessed that the market is in a downtrend, so we expect the price to form lower lows. We can have a look at the previous low on the market and place our take profit just slightly below that level. Something like this looks reasonable. We would have won this trade in about a day. At this point of the chart, I think it would have made a lot of sense to have an additional downtrend line connecting lower lows, something like this, and I think it may become clearer if we zoom in and only check that particular market action without cheating and checking what happened in the future. As you can see, the downtrend line at the bottom does make sense as it connects most of the lower lows we have on the charts. In this case, the take profit seems to be a bit misplaced as it is outside the market structure, so we would have slightly changed our take profit in order to have it inside the market structure, so above the trend line we have at the bottom. We would have won this trade in just a few hours.